Beautiful. Okay, so we led into this a little bit already, Matt, but talk to us about these housing starts collapsing. We're just not seeing more developments going on, and this is, of course, it's in the condo market specifically. We're seeing it a little bit in the freehold stuff as well. So, talk to me about what's going on with the starts as we monitor. Really, we've got a couple issues. We've got a price and buyer demand challenge in the immediate, but in the long term to medium to long term, we have the challenge of not having enough supply.
Yeah, exactly. And this is what happens in boom and bust cycles is that, this is what happens when you drive interest rates down to zero and then bring them up and then drive them down again. And it's just a yo-yo. It almost seems like we're never going to get out of this trajectory. And what we need is consistent building so that we're getting the amount of units that we need. But it doesn't make sense to build right now because the demand isn't there. But ultimately, the demand isn't there because you drove interest rates to insanely high levels that we haven't seen since 2008, 2009, with an economy that's different now. Like I said, the world changed in 2008 because of the great financial crisis. We became a debt-based society, clearly from that chart, which means you cannot just drive interest rates as high as they did. They did that to cool inflation. I get it. But now we're going to be in a situation where we can see starts are down 44% year over year. It's a 30-year low, lowest since 1996 when you adjust for population. Condo starts down 60%, mostly because investors, it doesn't make sense for them anymore. There's too much risk to put your money in something that you're not going to see a return on in potentially 3 to 5 years. And who knows where we're going to be. Hindsight says because of what's happening now, you're going to be in a better position if you buy now on a new build. But the cost of a new build is insanely high because of development charges, because of materials, because of labor. So maybe you only break even in the future. So you got to be, I think that's what investors are weighing there. And then since 2024, only 21 condo projects have been canceled. So more condo units have been canceled than what the government's going to build in new housing. So had we not done this crazy, rate cuts and government spending and things were just a little bit more stable, those units would have already been in the market. So they're gone.
Without taxpayer money.
And the government's going to spend $3 million. Okay, would you spend $3.2 million on a condo? And the answer is no. You could get one for $400,000, $500,000, $600,000, $700,000, depending on where your location is. But don't worry, the government's going to build you one for $3.2 million. You'll never own it. They'll rent it to you. So again, crazy. When it comes down to the rental market, the rentals have started to slow 8%, not as bad as the condo starts, but there is a slowing down. We are seeing a little bit more rentals hit the market because we're seeing rental prices start to decrease. But again, the amount that we're building is starting to slow down. So we will start to see that in the future if we don't start to build up again. And then kind of the national picture, Canada overall, starts are near record highs outside of the GTA, outside of Vancouver. We are actually building more just because the price points in those areas make sense.
Yeah, it's feasible now.
It's feasible.
Yeah.
And let's not forget, too, the municipalities came out with all these development charges that weren't as high as they were pre-pandemic, zero bound interest rates, so that they could soak up as much money as possible. And they need to scale those back significantly. The only question is, where are they going to get their money to help run the municipalities because they can't take on debt, which ultimately, if they bring those back, our property tax is going to start to accelerate to the upside.
Yeah, and when we see that MPAC hasn't updated theirs still since 2016, we've missed 2 updates now. Really should have been 2020 and then 2024. Are we going to see those evaluations start coming in where people's home values are getting reassessed, so their taxes are getting reassessed now at much higher rates? And with the amount of sales volume decreasing as much as it has, it is hard for municipalities to get money elsewhere, which is why the development fees, I think, have also been higher than they need to be, because that's how they get some of that money coming in. And so if they bring that down like you said, if they bring that down to stimulate building, where's the money come from? And there's a good argument that we should really be watching what's going to happen with MPAC and our property taxes, because they're behind. They haven't done them, and they're going to be looking for another revenue source. At the end of the day, there's been a couple of reports that have come out saying Canada can't afford to continue on with some of the, let's say, assumptions of what always works in regards to our tax policy. They are going to need to make changes. They do need to find some of this money. We're talking about 13 billion going towards 4,000 units as the headline. Well, how are we going to get the money for that, right?
And that's it. And it's crazy to think that we're charging individuals who want to buy a home to start a family or start a life in this country, and they're paying $150,000 to $300,000 of the cost of that home for these municipality fees. Mm-hmm. And some of this needs to be spread out, I think, to, they're not the only ones that should be paying these massive chunks of money for the greater good of the entire town. It needs to be spread out a little bit more, like it was done in the past. I don't know how these municipality fees work or how they were implemented. So I don't want to, maybe I've been misquoting some of this. It's just kind of off the top of my head, this kind of what it feels like.
Yep.
But it feels like to me that they shifted raising everyone's property tax to just putting it all on anyone buying a new home, trying to take advantage of the market that we're in with zero bound interest rates. Because when you're zero bound and you're only paying 1.5 to 2%, it's easier to dump those fees on someone over a 30-year period than maybe it is in a market like today, which clearly is what's happening.
It may be an oversimplification, but you can't help but look at it and see the two correlation between the two, how one's kind of dropped off and the other one's really ramped up.
Yeah. I mean, if these development fees were 50 grand instead of 300,000, builders could be selling these for lower than what they are today. And maybe that's would help a little bit get people in the door for those developments.